Welcome to the daily insights that matter. After the most awaited event, the Union Budget of 2023 was announced. We will decode what it means for you from a personal income tax perspective. Finance Minister Nirmala Sitharaman met the expectations of a salaried person in the budget who were hoping for a tax relief, but with a catch. Let's discuss this. The first major announcement made by the Finance Minister was that under the new tax regime, any person with an income of up to 7 lakhs will not have to pay any tax. This was increased from the previous limit of 5 lakh. The second announcement was related to the middle class, where the new tax structure slabs were modified. As you can see, under the new tax regime, the tax rates are comparatively lower and extra slabs are introduced as well. Also, if your income is up to 7 lakh, you will be eligible for a rebate of Rs 20,000, which was earlier 12,500 for income up to 5 lakh. Provided you will have to file your income tax return, also known as ITR, to claim the rebate. In the beginning, I did mention that there is a catch with the new changes. Though the tax rates are slightly lower and the exemption limit has increased to 7 lakh, taxpayers cannot claim Section 80 deduction under the new regime, like HRA exemption, health insurance, ELSS investments, and other benefits. Only salaried persons with an income of Rs 15.5 lakh will be entitled to a standard deduction of Rs 52,500. Let's take an example if your income is 10 lakhs. Under the old regime, after all deductions, the tax liability would be 18,200, whereas under the new regime, the liability would be Rs 54,600 without any deductions. The deductions under the old regime could include standard deduction of Rs 50,000, housing loan interest deduction of Rs 2 lakh, Section 80C deduction of 1.5 lakh, tax deduction under Section 80D of Rs 25,000 on health insurance premiums paid, and lastly, contribution to the national pension system of Rs 50,000 and so on. The old tax regime still looks more lucrative for people with higher annual incomes, but only if they have the investments to claim enough deductions. Another major announcement was that the earlier highest tax rate was 42.74%, which was the highest in the world, to which the Finance Minister has proposed a maximum rate of 39%. The surcharge rate for the same has reduced from 37% to 25%. Manufacturing PMI fell to a 3-month low of 55.4 in January. The Purchasing Managers Index is an economic indicator that measures the performance of the manufacturing sector. It is based on a survey of purchasing managers who are asked to rate the relative level of business conditions, including employment, production, new orders, prices, inventories, etc. A reading above 50 indicates expansion in activity, while below 50, it's a sign of contraction. The S&P Global Manufacturing PMI started 2023 on a weak note, as in Jan, it fell to 55.4 from December's PMI of 57.8. One of the factors that can be attributed to moderating PMI is the increase in input costs, transportation, and personnel, which manufacturers have passed on to their clients. Another reason is the export data, which emerged as a major area of weakness. Despite receiving new orders from international markets, the growth was minimal and slowed down to a 10-month low. While the PMI moderated in Jan, there has been continuation of improved overall operating conditions for the 19th consecutive month, despite macroeconomic headwinds. Despite some loss of growth momentum, the sector is likely to remain in expansion mode as the current fiscal year comes to a close. So what does all of these news mean for you? Though the taxpayer has the option to opt whether he wants to adopt the old regime or the new regime, one can evaluate their tax liability under both regimes and select one which is more beneficial. This will have a direct neutral impact on you. While the global outlook is deteriorating and very uncertain, Indian manufacturers are confident in their ability to lift productions from the present levels. The increased activity also indicates resilient demand despite global challenges, but the macroeconomic headwinds will still remain a pain. This will have an indirect positive effect on you. So while I say this is me, Rahul Hassan, signing off. Have a great day and take care.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.